So a lot of my folks that are in industries are telling me that the banks are done, they're gone. I am a Bitcoiner, but let me explain something to all you out there. Banks aren't going anywhere, right? The large banks, that is. We may lose some small banks, some medium-sized banks, but the large banking institutions aren't going anywhere because guess what? They run the country. What's up, people? Welcome to this episode of the Buy the Hood podcast or webcast, because I don't know how you're consuming this content. I'm your host as always. My name is Jimmy, and as we start off every show, that's with gratitude. Just want to say thank you to all of our supporters, to everyone who supports any endeavor we got going on out there. A special shout out to all the students from Buy the Hood University, all of our members of MDC Strategy, and all the youth from the Buy the Hood ownership camp. I got my partner in crime, Core, with me. Core, what's good brother?
Man, everything is good, man. Every day above ground's a good day, so we're not gonna complain about living.
That's right. Listen, our new podcast format. I love this real short blurbs. We get in and we get to chopping these fables, as Loaded Lux would like to say. We got to chop these fables. But we got an interesting topic today, right? Which is really banking, right? And I'm going to pull this article up and read it for those listening on the audio. It's all good. You don't have to. You can just hear me read the article. You know what I mean? But if you did want to watch the video, you can click and watch the video. It's on YouTube as well as Facebook. So make sure you subscribe to both our YouTube channel and our Facebook page. But let's get right into it, Core. Let's not even waste any time. Let's get into this topic because this is a very interesting topic, and I'm going to tell you why I believe so. So the headline of this article says that bank earnings impress investors and leave analysts asking what crisis. Everybody knows what's been going on in the banking sector, with some of the smaller banks, Silicon Valley Bank and whatnot. And we talked about that a couple pods ago, specifically about Silicon Valley Bank. All right, so let me read this article real quick. And by the way, this is from Yahoo Finance. It says banking crisis. What banking crisis? That was the message delivered by some of the largest U.S. lenders on Friday as they discussed their performance during one of the most challenging periods for the banking industry since 2008 in the financial crisis. So JP Morgan Chase, Wells Fargo, Citigroup, and PNC all reported surging revenue and profits in the first quarter, even as regulators seized some regional lenders. And panic set across the financial system in March. Their top executives offered multiple assurances that the worst was over. And it goes in some quotes from Jamie Dimon, as well as other bank executives. Some people still think there are challenges ahead, but they're trying to assure us that there's no challenges. There's several reasons why I think this is an interesting topic. And, let's get into it. Let me say one thing, Core, before I give you the floor. All right. So a lot of my folks that are in industries are telling me that the banks are done, they're gone. I am a Bitcoiner, but let me explain something to all you out there. Banks aren't going anywhere, right? The large banks, that is. We may lose some small banks, some medium-sized banks, but the large banking institutions aren't going anywhere because guess what? They run the country. If you think that we're moving towards a digital dollar and we're moving into a Bitcoin standard, a crypto standard, guess who's going to own that? The big banks. They aren't going anywhere. So let's just throw that off the table. Like, that's not part of the conversation because people keep coming to me with that. Banks are done. Corey, like I know, when it comes to politics, when it comes to education, when it comes to food services, when it comes to the legal system, who runs all that?
Banks.
All right, so we got that established. Now,
that's just easy money.
So what do you think about these large banks surging at a time when people are scared about banking in general? What are your thoughts on that, Core?
Well, the banks are surging, in my opinion, for two reasons. One, because they're slowing down and could be stopping raising the interest rates, which means banks are going to boom. Because now banks can get more money on the streets. Because now they know that inflation is not going to keep rising at the same rate, and that the Federal Reserve is not going to keep making the dollar stronger. And the other reason I think is because Bitcoin is surging, and Bitcoin is 85% institutionally owned. And when Bitcoin prices surge, banks' prices will probably surge in the future because all the banking institutions are getting into the Bitcoin game. So I think it's a combination of both of those things. The first thing I said being the bigger factor rather than the Bitcoin. But I think because we're going to be playing that Bitcoin central banking dollar game very, very soon, that every time Bitcoin surges, banks are going to surge also.
So I'm not sure about that yet. I have a whole different perspective. It's not even that. It's not even complicated. It's actually less complicated than all that. My opinion is this: we started having these issues with the smaller banks and the medium-sized banks, the SVBs and the such. A couple months ago. The thing about money is it has to go somewhere. If you look at all those big banks, the Wells Fargo's, the JP Morgans, the bigger banks, all of their depositors went up. When people move their money from SVB and all this, where do they run to?
They put them right in the big banks. They put them in the Bitcoin, they put them in the gold, and they put them in the big bank.
Yeah, it's
the money
really
gets moved.
It's really that simple because if you look at it, they have like more depositors now, and a lot of these accounts are huge accounts. Yeah. They're huge accounts. I saw somebody it was an article the other day. I think it was a Charles Schwab investor cashed out of their Charles Schwab stock like 1.9 billion or something crazy. People like a lot of times we think these are just regular mom and pop folks. These are institutions also moving their money. And where are you going to go to? When you're looking for safety, you're going to go to one of the big boys. You're going to go to because, we all heard the term too big to fail. When they said too big to fail, they're not talking about like, your little regional bank. And there's nothing wrong with that. I believe that the smaller banks have to exist because they're the ones that give certain folks opportunities when the big banks won't. But when you're talking about safety, in my opinion, people are going to run to the big bank for safety. And I think that's what's going on here. So that explains that to me. Like,
I mean, we had a stat last year. We were talking about, I think it was like BlackRock, JP Morgan, and Goldman Sachs. Out of the S&P 500, I think they own a giant stake in 96% of them.
Yeah, it was BlackRock, and it was BlackRock, Vanguard, and somebody else. I know BlackRock and Vanguard are 1 and 2, and they go back and forth.
It was either Goldman Sachs or JP Morgan, but it's like 90%.
State Street is another one. I don't think it's one of them. I think it's like State Street. But either way, there's a small. But go ahead. Your point is taken.
It's the same thing. Like there's certain like those the ones that own all of those, they're not going anywhere. They're not going anywhere. And the reason why they're not going, if they go away, then the American lifestyle goes away.
So
you know what I mean? Like, so you better hope they don't go nowhere.
What you're saying is they are in fact too big to fail.
Oh yeah, because my thing is they're fronting the money for all these companies. So if they go away, then a lot of what you consider the American dream goes away with them. So you got to actually root for these weird ass companies, these big ass banks, in a weird way. Because if you don't, then what as the American lifestyle just goes up in smoke.
That's why I always found banking to be like one of the more intriguing and more interesting like concepts, because banking is an idea, not necessarily a place. But also when I look at it as a business, because everybody got to come see you. Like banks are damn near like the mafia. Like you got to come see me.
Not damn near.
If no matter what kind of institution you run or try to scale, you got to go see the bank. That's why I laugh at a lot of my fellow real estate investors, the way they be talking. Like, I'm like, banking is where it's at. All you guys got to go see the bank. All you credit gurus, you got to go see the bank. If you're building a business that serves whatever it may be, it could be.
I'll go see the bank.
Cheese pretzels, you got to go see the bank. No matter what business you're in, eventually you got to go see the bank. And now, with cannabis coming along, there's rules that don't allow them to see that, but they've kind of like created their own ecosystem, which is, bank-like. But you gotta go see them. Like in order to take a business and scale, or not even scale, just to protect or get access to the system that we call capitalism, you got to deal with banks. It's no way around it. Like most people, I don't know the statistic, so I'm about to like do what we call a POMA statistic, and POMA stands pulled out of my what. So my POMA statistic are 99% of, and by the way, I'm really making this up. I don't know the numbers, but I would assume it's more than 90% of folks that buy property get a mortgage, go see a bank. Most folks aren't walking into a bank with straight cash. Straight cash, homie, as Randy Moss says. You're going to go see the bank. So when it comes to acquiring assets for yourself individually, you got to go see the bank. When it comes to building a business, you got to go see the bank. You want to run a political campaign. Guess what you got to get? Resources and banking.
Yep.
It's no way around it. So I think it's interesting that the banks have went through this phase where people were really believing that they're in trouble, and now they're surging.
Yeah, like regional banks. Yeah, but these big banks, no, broski. Like, and the thing is, there's laws in place where the big banks have to actually report, um, because Obama put rules in place in 2008 after the banking collapse, 2009. Actually, he put rules in place that says after, if a bank is big enough, there are certain rules they had to follow through the SEC and all the other filings, and they got to show that they have enough money on hand to do all of the things that they do. And so even though some of these smaller banks are exempt from that, these big boy banks not exempt from that.
Yeah.
And so those actually, with the rules in place, are some of the safest places to put your money, because they're under the heaviest scrutiny of all the banks.
Yeah. Yeah.
You know what I mean? Like, so not that they're safe places, but as far as
people run to them for safety, but if you're looking at them in comparison to others, then
to the other banks,
it's actually not a bad decision, is what you're saying.
Yeah, because they're actually under the highest level of scrutiny, because they're because of the rules that were put in place. Dodd-Frank is what
so no, I said, you talking about, you said the Dodd-Frank Act, and
yeah.
And the thing is, though, this is also a time where people are running to gold, precious metals. And I do want to put out there, we created a precious metals course a couple years ago at this point. It's still out there in the market. If you have no idea about precious metals, but it's something you want to learn based on what's happening now, I'll put the link in the description for, the precious metals course. I'm also going to put the link for the article I just read. That's one thing someone hit me up about on our previous episode. Like, yo, you was talking statistics and stuff. You ain't put the article on. My bad. Promise you I got you this time. I'll put the link in that article for the article we're talking about right now in the description, as well as a link for our precious metals course, because precious metals is also surging. Gold was over $2,000 an ounce. When we first dropped our course, I think at that time
1,700 or something like that.
It's 16, I believe, like 1,600
something,
per ounce when we dropped our course. I remember that because it was above 15, so it was like 16 and some change.
It's up 40%.
So if hey, I gotta make an ad about that one. Listen, if you'd have copped our course and bought gold, you'd be up X% at this point. But when we dropped that course, so I mean, the fact of the matter is that's also another safe haven. And in that course, we get into all the various reasons why you want to buy physical and hold your own physical, not just buying a contract for it. So, cool. With this being said, though, and anything we say on this show, by the way, is for educational, informational purposes only. We are not your financial advisors. We are not giving you financial advice. We are not your fiduciaries. But I want to ask you this last question before we, move on. What do you think about banks and, personally as an investor? And is it something that you're messing with right now?
I never mess with banks heavy. I have a business relationship with banks. And then I really don't have really that many personal accounts with banks. I have a personal account with my bank. So I have a personal account and a few business accounts, but no really that I don't really bang with banks like that. And
not necessarily. I'm talking about from a banking standpoint. I'm talking about as an investor. Are you investing in
No.
Okay.
I invest in mining companies. Like, so I would rather invest in the mining companies. I invest in banks roundabout because I invest in the S&P 500. So, that's where I get my exposure to banks. I don't really I don't buy a bank specifically or banking ETFs. That's just not my cup of tea.
Okay. No, I was just asking.
I mean, because they're not going to be fruitful, because just what we just was talking about, banking is not going anywhere. But because of the way I set up my portfolio, they don't pay enough in dividends to meet the requirements for my portfolio. So, because my portfolio is set up mostly as a income portfolio.
So it's interesting you say that, because they tend to pay some of like the higher dividends and the safest dividends too. But let me say this though. because I used to be big on banks and banking in terms of my portfolio, but over the last maybe half decade, I've been buying an ETF, which is VFH, and again, not investment advice. You can look it up. It's a Vanguard Financial, and I've done pretty well with that. And in fact, when all the stuff happened with SVB, it shot down. I started buying more and buying more because I want exposure to banking. I had a clip. I forgot whose podcast we were doing, but it's on our Instagram page where I said, "Look, there's only two things I know for sure. You can put me in a coma when I come back in 20 years. Real estate's gonna be worth more, and the big banks somehow will be worth more." And I really mean that, right? Even if we move into this metaverse crypto space, the banks will find a way.
Nothing is happening without the banks.
Yeah. So with that being said, though, I definitely love exposure to it.
So what I want to say about that is that even in this crypto verse, it's set up just like the current system, which is why Bitcoin is so different than the rest of the coins.
It is
because it's literally set up exactly the same way as the other system is set up.
Yeah, so which is why.
There is just these new cryptos, they're literally funded by the same people that the other companies are funded by. So it's set up exactly the same way.
I'm not trying to get cussed out by the Ripple folks because they got mad at me on that Bitcoin episode we dropped because Ripple is a gang. But that's the reason why I don't mess with most things, because like if you're trying to get away from that system, why do that? But so I want to have it both ways. I want to be able to make money no matter what happens. It's something what's the Ray Dalio? He has this like all-weather portfolio. I've been with the all-weather portfolio because what he's saying is when I wake up every day, I'm going to make money. It don't matter what's happening because I buy assets and I buy different types of assets. So no matter what's happening in the world, I'm going to make money, right? I'm going to make money if my gold goes up. I'm going to make money if I get dividends from stocks. I'm going to get money because my land is going to increase in value. It all comes from owning assets. So I kind of like that approach. But what I like about banks, though, is, and it's one of the reasons, if you look at Berkshire's portfolio over the years, they've owned a ton of banks.
Yeah, they got a gang of banks in there. They did. Yeah. He got rid of some of the banks.
He got rid of
Wells Fargo.
Yeah, basically because he said they were scamming. Like, if you read what he said,
he was sick of them. He was just sick of them.
Put it in our colloquialisms. He said, "Yo, they were scamming." Like, so
yeah, he was sick of them.
But with that being said, though, give us your opinion. Though, let us know what you think about the banking industry. Do you think it's going anywhere? How do you think banking will change over the next several years? What do you think about the technology companies in the banking system, such as like Cash App, Venmo, PayPal?
Oh, speaking of that,
the other one.
Had some conspiracies about why boy got took out, because he definitely got took out.
Oh, the boy from
the Cash App CEO.
Yeah, but did you hear the story that really happened? It was a lovers' quarrel allegedly.
Hey, listen, man. I'm just saying. There were some stories out there about how my man got.
Those stories only happen based upon the fact that he worked at Cash App. From what I hear, and again, this is just what I've read online. He was stabbed by someone. He was out and having an argument with 2 a.m. Him and another dude was in the car. They had some sort of argument. He got out of the car. Dude pulled the car over, followed him, and stabbed him. So they were saying that, it was domestic. It wasn't. Half of the people that say that too are the same people that said 5G caused COVID too, right? Don't think I forgot about y'all, because I remember y'all. I remember all the 5G stuff too. I remember y'all. So y'all
Yo, that's absolutely hilarious, bro.
Yeah, all y'all 5G caused this. Where y'all at now? I ain't seen that in a while, but y'all was out here on my timeline with that 5G.
Listen, man, I listen to the tinfoil hat people because they be right.
I love it. I love conspiracy theories. I think they make the world interesting, but some of them just go too far, and that's
some of it just senseless.
Yeah, but what I was saying is, and I'm asking this question not just to you, Core, but for anybody listening to the audio or watching the video. What do you think about in the future, how will these technology companies affect banking? Like SoFi is another one. It's a number of them in the fintech space.
Square, SoFi,
the whole fintech space.
Yeah. That. I mean, they're going to have an effect. It's just what effect. Visa was linking up with Visa's linking up with the banks now, so we gotta look at that.
What's interesting to me is Google and Apple's approach to this, because they're moving in those pockets slowly but surely, and it's getting to the point where I don't even
They're
necessarily
becoming
need
their
the
own
other thing.
bank.
Yeah, like so Apple has the affiliation with Goldman Sachs for the card, and they're actually making more money off transactions than Goldman Sachs. They set that up real nasty. Like so Apple was into that space. You're able to send money Apple Pay to people. You can pay with your phone. Like Google has Google Wallet, and they're doing their own thing. So that's what I'm watching in that fintech space to see how they jump in and what they do. They got all the data. They got all the data.
Yeah. So I mean, they're competing, right? Because at first it was just Square and SoFi, and then the banks got
Well,
involved
Venmo,
because
Cash App, it was a number of them, but
I'm just saying, but they weren't all, they weren't all on the same PayPal, you know what I mean? Like they all were, and then it just got competitive because the banks was like, we losing too much money to transactions, and then they started Zelle and Venmo, you know what I mean, as a response to Cash App and PayPal and all of those services. You know what I mean? And so basically what they're doing is creating nodes. You know what I mean? Like basically what they want to do is onboard people and create nodes.
But here's
You
the
know
thing,
what I mean?
though. What I recognize as a consumer, right? As much as I love Bitcoin and anything decentralized, I realize that most people don't care about decentralization.
At
In
all.
fact, I feel most people want things centralized because of ease of use. And what I mean by that is this. There are several applications I would use back in the day to do certain things, but once and I use both I got a iPhone 14 and a Galaxy S23 Ultra. Once Samsung or Apple put that feature into their operating system, I erased the app because I don't need it no more. You know what I'm saying? Like, because now they already baked it into their system. So a lot of times it's ease of use when you put things. So if I use an app to do whatever it may be, but then Apple puts it into like now you have the Apple version, you know it's going to work better with your iPhone. It's going to work better with your iPad. You don't
100%.
need this third-party app, even though they're a separate company over here. People like centralization. So I bring all that up to say, if I can do all my banking on my iPhone, right? The same place that I'm already on here 24/7 on socials. I'm already paying with this. I'm taking pictures with this, so I don't need a camera anymore. But if I can move my banking to that thing, I think that's what I'm looking at to see how they'll move in that space because we love to have things centralized. Everything can be done with this one device. I don't want to have 15 devices or 15 accounts. Imagine me having an Apple account. I mean, it's kind of scary when you think about it. It's almost like one of those movies where you got the big giant corporation that has all the information. It's kind of like that.
Yeah, it's Skynet, bro.
It's yeah, right. But from a consumer standpoint, it's ease of use, and so not to get too. Let's take our tinfoil hat off though and get back to biz. Right. So the bottom line is this though. Everybody watching, leave us some feedback. Let us know what you think about banking. Give us your perspective on the big banks are flourishing right now as we who knows what will happen the next couple of days because things go crazy in this world we're in. It's 2023. Nothing should shock anybody. But give us some feedback. Let us know what you think. Hit us up on all the socials. We're at By the Hood. And I just want to say we appreciate all the support. Corey, any last words?
Yeah, man. Just be careful. Show love to the people who show love to you. You know what I mean? Don't be out here, doing the most. Do the very most with the people that do the very most with you. That's all.
Absolutely. Stay safe out there, y'all. And as we always say, it's not about how much money you make, it's about how much you keep. Game Elevates. We'll see you on the next episode. Peace.